but the macro direction, meaning if you zoom out, the further out you zoom, right, the more it looks like it's a liquidity suck, right? With gyrations hour to hour that might be semi-news driven. Like this morning, we had the tariff announcement. Europe needs to move faster, so blah blah blah, right? And we saw what happened last time, right? Okay, yes, for a while the sky was falling, and then all of a sudden, it looked like it was back to the overlay of the liquidity, cycles, right? And I think that's what's happening now. So, anybody who basically was panicking this morning because Bitcoin fell 3.5% has not been paying attention, right? And so I think we're going to see more of this cycle because of the nature of the money printing, the negotiations, Trump feeling like he has to tweet every thought he has, every minute he has them. And things like that, but by and large, when you zoom out, it does look like Bitcoin has become that overlay. Look, if you accept that the network itself has value, right? Just using kind of traditional network theory, and you overlay and with a fixed float, and you overlay that on top of that something that is constantly increasing in the float, this has to happen.
Yeah, 100%.
It has to happen. And grayscale stuff, and now it's kind of the premium on MicroStrategy, but the perpetual future leverage ratios are at all-time lows relative to where we are in the rally, meaning if retail was on board, the amount of leverage in the system would be much higher than it is now, right? And so what that tells me is that there's a lot of room to the upside, and the downside swings shouldn't be as much as they were in the past, specific to Bitcoin. I mean,
now you mentioned the Bitcoin Treasury Company strategy. There's Metaplanet. There's many of these things. It feels like on one hand, this is the Hail Mary that gets caught every time, right? You put Bitcoin on your balance sheet, your stock goes up, everything's amazing. But there's also risk. And there's leverage being used. There are these premiums. Some people say, hey, look, there's this NAV premium, doesn't make sense, it's going to collapse. Other people say, no, that's like, future cash flow multiples, or, however you want to think about it. How do you evaluate when these things come out, whether you or Abra, like, should we buy, should we not? Is this something we should support or not, in terms of both the positives and the negatives?
Yeah, I think the vast majority of the public should be holding the underlying. Just buy Bitcoin. If you want to have a small coin allocation, Solana, Sui, we're going to get diluted with more shares, with the value of Bitcoin growing faster than the amount of dilution, which is the perpetual motion machine that everybody perceives that Saylor has figured out.
If you're a shareholder, then the NAV premium collapse back to NAV could mean a lower share price, right? So there's a potential loss there. But for the company, that doesn't mean that you have to sell your Bitcoin.
No,
right? That just means, hey, look, now we just traded NAV and we still own a bunch of Bitcoin, ETF. Whatever. Is there a scenario where something can happen and they've got to kind of puke back out all the Bitcoin that they've been buying, in your opinion? Like, I guess if people are demanding a payment of converts that aren't converting to equity.
No, I think my understanding, because I'm not an expert on what Saylor's set up, my understanding is that I don't see a scenario under which he would have to sell all the Bitcoin. If there was a rapid pullback, he might have to sell some to deal with the fact that the current note holders are underwater and they're not going to convert, right? So that amount of Bitcoin would have to get those OGs have a lot of Bitcoin. Why don't they want to sell? Well, two big reasons. One, I think the price is going to go forever, given what we just discussed. And two, I don't want to pay taxes. Right. So we have a great solution for that. And we basically use DeFi marketplaces. So our rates are like 5-6% right now, whereas centralized lenders who are artificially, have a cost of capital in the 10-11% range are charging 15% for the same loans. Now, where do we go from here? My take is that the DeFi networks that we use to process those loans in the background, so our clients don't see this, right? They can ask, we explain it, it's all in our risk disclosures, but the model that we've come up with is there's an open marketplace, yield on one side, mostly dollar yield, right? Collateralized loans on the other side, right? Why is that relegated to Bitcoin right now? Well, Bitcoin is the native asset that is worth enough money to warrant those loans. But there are assets out there that you can easily pump into DeFi networks if you do the tokenization correct. We're simply saying, create a standardized fungible model to do this for everything. That's the big vision at Abra long term.
Yeah, it's obviously finance is going in this direction, and the question I think is one, how much of the market is Bitcoin going to eat from a capital kind of suck standpoint, but also two, it maybe, I don't know, 5 years ago was 100% centralized in the traditional financial world, 0% decentralized. 20 years from now, it's not 100 and 0. it's some mix between central and decentralized. And I think that that's an open question as to like, where do we end up? Is it 50-50? Is it, in favor of decentralization or centralization? And then you're probably never going to get the full stack to be decentralized, because you're still going to have centralized companies or centralized, investors or centralized whatever, but you'll get maybe pieces of infrastructure, maybe it's markets or whatever, that as that decentralization comes in, there's a lot of benefits, right? And I actually think if you have more confidence in the decentralization, then obviously you should get more capital coming.
For us as a relative upstart relative to banks, and which is most crypto companies, I think the opportunity for us is to be the best possible crypto native bank that we can be for our clients. That means holding crypto assets, facilitating loans against crypto assets, preparing for the oncoming tokenization, which represents holding stocks as tokens, real estate as tokens, other investments as tokens, which are now liquid. So my bank account will be basically a revolving credit account against the value of those assets that I can spend in real time, right? Draw down on. And if I'm borrowing smartly against the assets that are appreciating quickly, I might not even be paying back my loans if I'm borrowing in the dollar, which is a perpetually depreciating asset, which I think long term is the demise of the dollar, because that system is not viable in perpetuity, meaning you can't have a perpetual motion machine which allows you to borrow forever against the depreciation. When we had losses, with Genesis and others, I tweeted about it. So that hurt, and not having that anymore has been awesome, right? And we're just as committed as we were then to following the rules. And we've always said, be very clear with us with what the rules are, and we'll follow the rules. Even if I don't like the rules, it doesn't. My personal opinion on the rules, I'll come on here pontificate, but ultimately doesn't matter, right? Because I'm going to follow the rules either way, or I'll get out of business. Right. So that's number one. And I would say number two is we need a model in crypto that allows upstarts to get in without a baseline level of regulatory spend that's untenable. And so I'm hearing rumblings of this kind of sandbox model between, like in the US, the CFTC and the SEC, and maybe it'll become a basis for other markets as well. Ours is a little more complicated, so maybe they don't need it as much. But this idea that you can operate in a model where, especially on the stablecoin they create, whereas everybody else who's not a bank won't, right? And I think that's an unfair practice. Now, you can create a money market token and pay yield on that. The problem is, if that's deemed a security, you're probably offering it outside the US. So you kind of back into some problems where you inadvertently create regulatory capture opportunities for the banks. And I don't think it was inadvertent. I think that was very conscious ploy on their part to basically say, okay, this is our opportunity to potentially own this in the US and let everybody, fight it out in other markets. So
Do you think that it's a problem that they would be able to do it?
Not really. I mean, look, it's still a dollar at the end of the day, right? Most consumers don't care, right? A dollar is a dollar is a dollar. And they don't understand the nuance of where the treasuries and short-term securities are being held. The average person who uses
that could happen this year that is positive for Bitcoin.
Biggest single development this year.
Like, is there one last, hurdle for us to jump over?
I think Bitcoin is fine. I don't think.
So do I.
I think Bitcoin doesn't care about corporate, adoption. I think retail is more important to Bitcoin long term than corporate adoption. I'm fine with it. My company's holding Bitcoin. We're going to continue to put profits into Bitcoin. But I think it's the getting the public to understand that the government is like not anti or pro Bitcoin. It just is. Would be a big win, because I do think there's this perception that the government was trying to kill. I think the ultimate place for high net worth investors, upper middle class, family office investors to hold crypto, hold their Bitcoin. It's bankruptcy remote, so you're getting a personal vault, right? That if Abra goes away is still yours. You're able to borrow against the value of crypto at low rates. You're able to earn yield on dollars, Bitcoin, stakeable assets, et cetera, et cetera. And I haven't seen any place that soup to nuts has.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.